All right, well, Joe, welcome to 2025. Looking good as always in that Bills hat. Hey, before we jump in here, just wanted to obviously, thank everybody that's listening. Harris, taking the time out of their day to listen to our podcast. 2024 was a great year. But before we jump into mortgage, to real estate, all of the above, Joe, let's talk a little bit about the holidays. On one hand, I'm glad they're over. Any highlights for you that you'd like to share?
No, I mean, just always a good time, right?
Yeah.
Always overeat, overindulge, and we come back for more every year. Seems like we never learn our lesson. But,
Yep.
It's I guess we got to tell our listeners Happy New Year because this is
Yep.
our first podcast
Of course.
of the new year.
Yep.
But looking forward to 2025. I did set so every year I kind of sit back, and I shared this with my ops team yesterday. I set a word of the year.
Mm-hmm.
So I actually set 2 words of the year this year.
I'm going to write these down.
One is innovation,
Okay.
and the other one is proactive.
Mm-hmm.
As I reflected back on the year that was, we did a lot. We created a lot in 2024. And the innovation that we're looking for is more of a streamline to our process.
Mm-hmm.
Trying to find better new ways of doing things that may be more efficient.
Right.
As well as on the proactive front, being more proactive with our pipeline management, reaching out to clients sooner and getting ahead of things. We do a good job of it. But me, I'm always of the mindset
Yep.
that we can be better. So I think that was for me as I reflect back on 24 and look forward to 25. Those are it right there.
That's I think those are great, obviously very appropriate for our business and where we've been and where we need to go. Before we talk about the Bills, I would just share just a little fun moment and a surprise that I had for the holidays was my wife, surprised me with a quick trip to Vegas to see Bruno Mars. So that was very, very fun. So I had a great time. And just if anyone has a chance to go see him, I would encourage you to do so. So it was very, very fun.
You don't strike me as a Bruno Mars guy.
Listen, Joe, my musical, interests are vast and wide. Everything from like Dionne Warwick, to probably Kendrick Lamar. So it's, pretty wide range, right?
Madonna in between.
A little Madonna in between. So,
All right.
So the Buffalo Bills, Joe, you're wearing your hat.
It's playoff time.
It's playoff time. I'd be remiss. You won the prediction, right? You said the Bills are going to be 12-5.
That was my prediction, back at camp.
Yep.
Seems like so long ago.
I know. I was not as optimistic as you were. I said 9-8, so I was wrong and you were right. So I lost that bet. But what's your predictions for the playoffs?
I said it at camp. This is our year. We're going to the Super Bowl.
Okay.
It's a long road.
Yep.
Starting this week with Denver.
Yep.
But I like our chances. We got the team's playing a lot better than a lot of people thought they would. We're not missing Stephon Diggs like people thought we would.
Right.
Josh is playing, having a great year, spreading the ball around. The defense does worry me a little bit, but
Right.
when you got Josh Allen, you can score the points to outscore the other team.
So I'm not going to jinx myself. I'm not making any predictions at all. I'm feeling good, but that's all
Okay.
I'm going to say. All right, Joe, so let's take that hat off and let's talk about
Let's switch hats here.
Let's switch hats. Let's talk about real estate and mortgage. So 2024 was a really busy year for GRB, for you, the team, in regards to really adapting to an ultra-competitive market to make certain that GRB was in a position to help out as many buyers win offers, to help realtors be successful. And I think it would be helpful for the group for us to kind of share with you what we rolled out, but more importantly, the impact. It's one thing to roll out a program. It's another thing for a program to have impact, right? So let's kind of start at the top here, Joe. So we rolled out the Community Partners Program, and maybe just remind everybody of kind of what that is and how it all went.
So the Community Partners Program is a closing cost discount for our teachers, nurses, doctors, firefighters, EMTs, military,
First responders.
first responders, et cetera.
Right.
And $600 off closing costs. We rolled that out in early January last
Sure.
year.
Yeah.
We had 257 individuals take advantage of that. So
That's
that was,
great.
That was great to see. The next was our Cash Plus program. So
Mm-hmm.
our Cash Plus is the fully underwritten mortgage pre-approval, and then we added on to it the guarantee.
Mm-hmm.
Last year, we wrote 562 Cash Plus approvals.
That's great.
So that's, a lot of extra work on the ops team because we're really processing that mortgage up front.
Mm-hmm.
Not all of them become loans because, maybe the people change their mind, they don't go
Right.
under contract, et cetera. And then we actually did 34 cash guarantees as well.
Mm-hmm.
So, just helping those buyers get under contract stand out a little bit more.
That's great. And then I know obviously I know in 2023, we rolled out Rate Relief, which is our discounted refinance program, but we obviously enhanced that, but then we rolled out Rate Relief Plus.
Don't forget about the plus.
About the plus, right? Kind of remind everybody, what is that? What is the plus, and what was the impact of
Yep,
that?
so the plus is a 1-year, 1-0 temporary buy down,
Okay.
meaning that if your mortgage rate is 6.875 for the first year, your mortgage payment is based on a rate of 5.875. We fund the difference between the two payments into an escrow account, and each month you make the lower payment based on the 5.875, and the difference comes out of that escrow account. We did 398 of those transactions, and then the biggest response we've gotten from clients is they'd love to have the option, right?
Right.
It's great to have an option to just get a standard 30-year fix, or also have the option of doing the Rate Relief Plus program.
That's great. That's great.
Manufactured homes, we rolled out and started taking on manufactured homes. We did 66 of them, which is, was a lot.
That's great. I mean, manufactured housing is obviously one of those types of homes that are certainly deemed to be more affordable and probably going to get a lot more play in 2025.
Absolutely.
Yeah.
Later on in the year, we rolled out our Welcome Home program. And what that program is for clients that open up an account with GRB. They could get up to a 1% credit towards their closing costs.
Right.
We had about 20 clients inquire about the program. We opened up, I think, eight new accounts. So we're putting the pressure on our salespeople to try and drive those numbers up in 25. We think it's a great program. If you're buying or if you're taking a loan amount of $250,000, that's a $2,500 credit.
That's great. That's huge.
So that's a big help towards down payment and closing costs and savings overall.
Right. Also this year, we've always been a very active lender within the investor community. We always have a lot of products and programs for whether they be a first-time investor or someone that owns 40, 50 properties. Obviously this year, we really ramped up our debt service coverage ratio program, and maybe just, Joe, again, remind everybody of why that's such a valuable program and how we did with that.
Yeah, so the debt service coverage ratio allows us to qualify investors on just the rental income of the property alone. So it doesn't look at their personal income, only the rental income of the subject property. We did 52 of those transactions this year, and that's continuing to grow. I mean, it was slow to start off, and we
Right.
started to see a lot more as the year went on. So I think that loan itself has a great place within the community, especially with so many people looking at purchasing investment properties and
Right.
taking some money out of their investment properties, et cetera. So
Yeah, and I think for those, obviously, most of the folks that I'm sure that are listening or watching right now are realtors. I would just remind everybody that, a lot of the applications that we did this past year were for realtors. So if you're a realtor that's an investor as well, reach out to us. Let us, see if there's a way that we can save you some money. It's a lot less expensive from a rate perspective than doing private financing. So something that you want to take advantage of. And then lastly, Joe, I know we talked about the rate relief extension through 2027, but obviously this year we added an additional, preferred partnership and then we expanded ones. Maybe you can talk about that.
Yeah, so we added a new preferred partnership with the Rochester City School District. So all employees of the city school district get $600 off closing costs.
That's great.
The district also offers a 333 program, which is $3,000 from the city, $3,000 from the district, and then a $3,000 credit from GRB. Those are limited. They only do 10 of them per year.
Right.
But we are participating in that program. We're excited for this partnership. We've made a lot of introductions with people that work at the district, had a lot of inquiries. We even did a home buyer seminar for them that went really well and had a lot of attendees. So a lot of excited people working within the district looking to buy homes. So it's a great partnership that we're looking forward to.
That's great.
And then the expansion was the U of R. So the U of R took their 333 program and made it a 1055 program. So $10,000 from the U of R, $5,000 from the city, and $5,000 from GRB. So, great programs.
That's huge.
To take advantage of if you are an employee of those employers.
Right. Again, for those that are listening, we can get you an updated list of all the affiliates of the UFR that can take advantage of that program. I think all in there's about 17 of them. Collectively close to 90,000 employees. So just a really great program. So, Joe, let's shift gears to the market. Obviously, we wrapped up December. I know obviously this time of year, things are historically slower, but, what did we walk away with in regards to the data for December?
So December, as the month went on, it became colder and colder, and that's kind of what we saw in the market too. The market was quieter than we've seen in a long time, and
Right.
actually, it's really picked right back up. I mean, there's a lot of everybody I'm talking to is saying they're swamped, and we'll talk about why in a few minutes. But as far as Monroe County, in Monroe and surrounding counties, we finished averaging 9.31% over ask, up slightly from 8.9 in November. For the year, we were at 8.15. So for all of 2024. 8.15% over ask on average for those counties. The average loan amount over list dropped by average dollar amount over list dropped by about $18,000 in December. It was $20,000 in November, so a little bit of a dip. Government volume was up slightly as a percentage. 10% of our volume was government volume, whereas it was 7.89% in November. And then when we look at Monroe County on its own, was 8.63% in December. Versus the 11.53 we saw in November. So a little bit bigger of a dip. Again, less inventory on the market. The highest percent and dollar amount over ask was a property in the 14625 zip code that went 171,000 over ask, which is about 50.5% over ask.
That's aggressive.
It's pretty aggressive. And then hottest zip codes, Greece still hanging in there with 3, but Pittsford and Webster were our hottest zip codes at both with 4 transactions each. And again, only 15 out of the 29 zip codes that we did loans in, we only did 1 transaction in. So again, kind of reiterating that slower market.
What about down
Onondaga and surrounding, kind of finished the year off. About where we've been. We've been pretty par with over ask. It was 0.36% over ask actually, but for the whole year it was only 2.3% over. So, as we've talked about, 2 very different markets, just down the thruway from one another. Average list price dropped from 281 to 195, and in Onondaga and surrounding, we had actually very little government volume.
And so again, Joe, we'll push that data out so everyone can see not only the month, but the kind of the year by year or the month by month breakdown to see, because there still is a seasonality to it that will be, I think, helpful as well.
Absolutely.
Yeah. So let's shift gears. So obviously a lot of, news right now and regarding rates. What are the direction of mortgage rates? We got a new administration that's starting here in the next really week or so, right? What impact is that going to have on rates? And the reality is that, obviously rates really the past 30 days have been flat, and now they've ticked up a little bit, but kind of in a holding pattern per se, and certainly one of the things that we're doing, Joe, as you know, is that every Monday we push out an update that comes out around 9 o'clock. The Monday minute update, which lets the realtors and people that are on that distribution list see where mortgage rates are at that point in time. So if you're not getting that, let us know. We want to make sure that you do receive it. We are finding that people are finding that helpful, but it's tough to, it's easier to predict what the bills might do than where rates may go, right? And I think, but our best guess at this point is that rates are going to be fairly stable, but this could change. But people's expectation of rates coming down a lot, we don't see it at this point. Anything else you'd share around rates, Joe?
Yeah, I mean, I think it's a wait and see.
Yep.
I know Trump did say yesterday that he thought rates were too high in his speech.
Yeah.
I don't know how we get them lower, but we need some economic activity to drive them lower.
Right.
But I do think that we're going to see this 6.5% to 7% range for some time, and I do think, as we've talked about in the past, I think consumer behavior has started to take note where people are realizing, hey, you know what, it doesn't matter where the rate is. If I want to buy a house, I want to buy a house.
Right.
And so as long as they can afford it and it works within their affordability, of course. But I think we're starting to see that more and more as time goes on.
Right. So we got a big event coming up the end of the month, kind of talking about rates. So obviously it's the annual Mortgage Bankers Economic Forecast. We've got a great lineup of speakers, and maybe I know that the event is selling out fast, but kind of real quick, Joe, what's the agenda and what's the objective of that?
Yeah, so
meeting?
we've put this event on. We brought this event back 2 years ago, and we were very pleased to see we had 400 people in the room, and that happened again last year. We do put it on in partnership with the Rochester Home Builders, the GRAR, and the WCR. So there is and the Rochester Mortgage Bankers Association. And it's a great event because we have a speaker from the National MBA that comes in and gives both a national and a local perspective on rates and the economy, et cetera. And then Jim Yockel, the head of the GRAR, will give his kind of state of the real estate economy for Rochester. And then we are going to have a fireside chat with Pam Helming, Ryan Davis, and yourself. And Jim Yockel will be on the panel as well, talking about the Reimagine Rock Housing Initiative, as well as what some of the districts are doing as far as opening up to different ideas about housing and what type of initiatives they're taking as well. So it'll be a great conversation, great insight into what's being done kind of behind the scenes to try and address some of the inventory challenges we're having. Also a great networking opportunity with 400 lenders and realtors in the room as well and builders as well.
That's awesome. So switching back to product updates, right? Obviously, we are excited that this is going to be our 7th year of participating with the Federal Home Loan Bank with the Home Buyer Dream Program.
Yep.
Really excited, about that. And Joe, kind of share with everybody, obviously there's some programs that they've had in the past that are being rolled out again, but there's some new ones too. So do share.
First off, I mean, I was very, this is the first time I actually went back and kind of compiled the data. And, we've done, since 2019, 623 Home Buyer Dream grants. And we've given out over $7.5 million.
That's 623 families or households that we've helped.
Correct. 623 families or households that we've helped get into homes. Last year was 121 for $1.7 million of grant money.
That's great.
I mean, that
our biggest year ever.
Take a moment, to pause and just think of that impact. 623 people that we've helped get into homes is just impressive.
That's
and
great.
That's kudos to our loan officers, our back office as well, the processors, the underwriters, the closers, everybody working hard to make those dreams come true, and it really is a great thing to see. The program is relaunching again this year in 2025. We talked a little bit about it on the last podcast. Didn't have all the details. So February 10th is the official launch date where we can, as a bank, start sending in households because they do have to be reviewed by the Federal Home Loan Bank, and we can start sending in those requests to get them approved.
Great.
The Federal Home Loan Bank did offer grants of up to $30,000. As a bank, we've made a decision to offer those grants up to $15,000. The reason being is we want to help more people. We want to help more people get into homes. We think that $15,000 is a good amount of money to help you get into your first home, and we think that being able to help double the amount of people is something that we could all get behind. That was the decision that was made to kind of move forward in that direction. So there are 3 programs. The Homebuyer Dream Program, which is the normal program that comes out every year. That's for clients and individuals, households that make less than 80% of the area median income. Then there's the Homebuyer Dream Plus program, which is for households that are above 80% of the area median income, but less than 120%. And that we did do some of those last year. And last year, we actually helped, I think, 20 households get in with that program. And then the new program this year is the Homebuyer Dream Wealth Builder program. And that program is meant for individuals currently living in a majority minority census tract or first generational home buyers. So meaning that one borrower, their parents never owned a home in this country.
Okay. That's
so,
great.
All 3 products, we're doing the $15,000 on all 3. And our goal is to help as many homeowners as we can get into homes.
That's great. And obviously, at this time next month, we'll be able to give her, obviously not only an update, but obviously with a program. We'll be live and we can kind of speak to how that's all going and what we're experiencing.
We'll be able to talk about how many households we will have available, et cetera. So very excited. It's a great program. Again, every year it's New York State kind of giving back to the community, and
That's
it goes
great.
a long way.
That's great. So before we wrap up, just want to remind everybody, so again, I mentioned that every Monday, there is this Monday Minute that comes out from Joe to the real estate community that, again, talks about, an update on mortgage rates. We highlight a particular program or two that realtors can use with their clients. But these past few weeks, I want to remind everybody, there's been a survey that's been that is in that email as well, and we certainly encourage all of the realtors to click on that survey link. The purpose of that is for all of you to provide us with feedback on how GRB is doing, things that you like about GRB, things that you think potentially we could improve upon. How you feel about the market in the new year. That's invaluable feedback for us because, Joe, obviously when we kicked this off and you finally took off your Bills hat, we started talking about the products and programs that we rolled out in the new year, which a lot of that was done in response to feedback that we heard from realtors, their customers, the market, and all we know about the new year is that we're going to have to continue to listen to your feedback, be prepared to pivot, offer new programs to be competitive in this market. So take the time to complete the survey. It helps us help you. And with that, Joe, again, I'm hopeful that at this time next month we will be celebrating
Talking about
the Bills' Super Bowl victory.
One way or another.
One way or another we'll be talking about. It'll be great. If that's the case, there could be a bottle or two of champagne sitting on this table that we'll have to have a toast. So with that, we want to thank everybody for listening and hope everybody has a great January. Bundle up. It's cold out there.
Bills.
We'll see you. Bye-bye.